Let me be straight with you right now. The best nuclear trade may not be the most hyped SMR stock. While retail investors chase the loudest nuclear small caps, the real money may be hiding one layer deeper in the companies that supply the fuel, build the equipment, upgrade the grid, and keep the nuclear infrastructure running. The obvious trade is SMR hype. The second-order trade is nuclear infrastructure. And if you want to track the next layer of the AI power trade before retail starts chasing only the headline names, subscribe to Stock Breakout. Hit the like button and comment the nuclear, uranium, or grid stock you think Wall Street is still underestimating. Because this is not just a nuclear story. This is an AI power story. The first AI trade was chips. Then came servers, networking, cooling, and data centers. Now the market is moving to the next bottleneck, electricity. AI data centers do not just need semiconductors. They need reliable, long-duration, 24/7 power. And that is why nuclear keeps coming back in a conversation. But here is the key. The most exciting stock is not always the most durable investment. SMR stocks like OKLO and NNE can attract huge attention because they give investors a direct story. New reactors, new energy, new AI power supply. That story is powerful. But commercialization takes time. Regulation takes time. Permitting takes time. Financing takes time. And a great story does not automatically become near-term revenue. That is why the picks and shovels angle matters. The companies selling the fuel, equipment, grid upgrades, and engineering capacity may have a cleaner path to revenue than the companies still trying to commercialize the dream. If nuclear demand rises, fuel matters. If reactors get built or extended, components matter. If utilities invest in power capacity, grid equipment matters. If data centers need electricity, move from generation to load, engineering and construction matter. Power is not one stock. It is a supply chain. So today we are looking at 5 names: CCJ, LEU, BWXT, ETN, and PWR. And near the end, I will rank them from number 5 to number 1 based on nuclear infrastructure exposure, AI power relevance, business quality, risk-reward, and watchlist suitability for U.S. retail investors. Let's start with Cameco, ticker CCJ. CCJ is not the flashiest SMR story. It is closer to the fuel backbone of the nuclear revival trade. Cameco is one of the largest global providers of uranium fuel, with exposure across the nuclear fuel cycle, including ownership interests tied to Westinghouse and fuel cycle technology. That matters because if nuclear power demand keeps rising, investors may look first at uranium supply and fuel security. The market may not need every SMR project to succeed immediately for uranium to matter. Existing reactors need fuel. Life extensions need fuel. New nuclear discussions need fuel. Energy security policy needs fuel. That makes CCJ one of the cleaner ways to express the nuclear fuel theme. Retail may miss this because uranium is not as exciting as a small-cap reactor story. It does not sound as futuristic. It does not have the same meme stock energy. But in an infrastructure cycle, boring can matter. What could reprice CCJ? Strong uranium pricing, more nuclear policy support, utility contracting, fuel security concerns, and Wall Street rotating from speculative nuclear stories into more established nuclear supply chain names. My watchlist view. CCJ is a core nuclear fuel candidate, but not a buy at any price stock. The risk is clear. Uranium is cyclical. Commodity exposure can create sharp drawdowns. Valuation can get crowded when a nuclear theme becomes popular. Next is Centrus Energy, ticker LEU. LEU may be one of the highest beta ways to express the nuclear fuel security theme, but that also means investors need to be much more careful. Centrus is tied to nuclear fuel and enrichment, including HALEU, which is expected to be important for many advanced reactor designs. The company says it began HALEU production under a U.S. Department of Energy contract, and the Department of Energy has reported Centrus reaching a 900-kilogram HALEU production mark. That gives LEU a powerful narrative when investors focus on domestic enrichment capacity, nuclear supply chain independence, and fuel security. This is not just about uranium in the ground. This is about the fuel cycle. It is about whether the U.S. can support advanced nuclear without relying too heavily on foreign supply chains. Retail may miss LEU because the story is more technical. Enrichment is not as easy to understand as small reactor stock. But when policy headlines hit, this type of name can move quickly. What could trigger repricing? Government support, contract announcements, HALEU milestones, customer demand, advanced reactor progress, and broader interest in nuclear fuel security. My watchlist view. LEU is a high-risk, high-volatility fuel cycle name. The risk is serious. Policy timing can slip. Contract timing can disappoint. Execution matters. Customer concentration matters. And the stock can be much more volatile than higher-quality infrastructure names. Now let's talk about BWX Technologies, ticker BWXT. BWXT is not the loudest name in nuclear, but it may be one of the more serious picks and shovels companies in the group. BWXT describes itself as a company delivering nuclear solutions, with long-standing experience in naval nuclear components, reactors, nuclear services, and specialized nuclear systems. That matters because nuclear infrastructure is not just fuel. It is components, services, maintenance, specialized systems, government programs, commercial nuclear support. Compared with speculative SMR names, BWXT may feel less explosive, but it is also more grounded in real nuclear capabilities. Retail may miss BWXT because it does not always trade like a hype stock. It is not purely a data center stock. It is not purely an SMR stock. It sits in the serious middle layer of the nuclear supply chain. That middle layer can be valuable if Wall Street starts rewarding companies that already know how to operate inside complex nuclear systems. What could reprice BWXT? More nuclear services demand, government contract strength, reactor component demand, commercial nuclear momentum, and investor rotation toward quality nuclear infrastructure names. My watchlist view. BWXT is a quality nuclear components and services candidate, but valuation matters. The risk is valuation, government contract timing, project execution, and slower growth compared with speculative small caps. Now let's move to Eaton, ticker ETN. ETN is not a nuclear pure play. It is a power infrastructure compounder sitting inside the AI electrification cycle. And that may be exactly why it deserves attention. Nuclear power only matters if power can move through the grid and into the facilities that need it. Data centers need electrical equipment. They need switchgear. They need power management. They need backup systems. They need grid connections. They need reliable infrastructure from generation to load. Eaton describes itself as an intelligent power management company helping customers manage power, and it has become one of the most important public market names tied to electrification and data center power infrastructure. So ETN is not a bet that one nuclear project wins. It is a bet that the AI power build-out keeps demanding electrical infrastructure. That is a different risk profile. Retail may miss ETN in a nuclear discussion because it does not look like a nuclear stock. But that is the point. If the AI power trade expand from chips to electricity, the companies managing power can become critical. What could trigger repricing? Data center demand, utility capex, grid upgrades, electrification spending, strong earnings execution, and investors recognizing that AI infrastructure is not just GPUs. My watchlist view. ETN is a quality AI power infrastructure name, but very valuation sensitive. The risk is that expectations are already high. If industrial demand slows, margins compress, or AI power enthusiasm cools, the stock can reset. Now the fifth name, Quanta Services, ticker PWR. PWR is not selling the nuclear story. It is helping build the infrastructure that makes the power story possible. Quanta provides infrastructure solutions for electric power, including work around generating stations, substations, distribution, transmission lines, and grid construction and maintenance. That matters because the grid is the physical bridge between power generation and power demand. If utilities need more transmission, more substations, more grid hardening, and more large-scale electrical construction, PWR may become one of the practical beneficiaries. This is not a pure nuclear stock, but it is deeply connected to the broader power infrastructure theme. Retail may miss PWR because it is not as emotionally exciting as a uranium spike or a futuristic reactor headline. But in the real world, infrastructure has to be designed, built, repaired, and maintained. What could trigger repricing? Utility capex, transmission expansion, data center load growth, grid modernization, power reliability concerns, and continued infrastructure demand. My watchlist view. PWR is a core grid engineering and construction backbone candidate. The risk is execution, labor costs, project timing, utility spending cycles, and valuation. Now, two context names. GE Vernova, ticker GEV, belongs on the broader AI power and energy infrastructure watch list. It has exposure across power generation, electrification, grid solutions, and nuclear technology through GEV and CEG. Constellation Energy, ticker CEG, is different. CEG is an existing nuclear asset benchmark. If investors want to understand how the market values operating clean, reliable power assets, CEG is an important reference point. Constellation describes itself as the nation's largest producer of clean, low-carbon energy with around-the-clock reliability. But today, the main five are CEG, LEU, BWXT, ETN, and PWR. Here is the comparison. CEG is the best uranium and nuclear fuel leverage. LEU is the highest beta nuclear fuel security angle. BWXT is the best nuclear components and services quality name. ETN is the best electrical equipment and AI power infrastructure quality play. PWR is the best grid engineering and construction backbone. These are not equal risk stocks. Some are closer to nuclear fuel. Some are infrastructure and grid names. Some are quality compounders. Some are higher beta watchlist names. Some may benefit from AI power demand without being pure nuclear stocks. And before the ranking, we need to be clear about risk. Nuclear projects take time. SMR commercialization may take longer than investors expect. Regulation and permitting can delay projects. Uranium and fuel cycle stocks can be cyclical. Infrastructure stocks can become expensive if the trade gets crowded. AI power demand may not translate directly into earnings for every company. A picks and shovels theme does not guarantee stock performance. Some companies are not pure nuclear plays. A watch list is not the same thing as a buy signal. Position sizing matters. Nothing in this video is financial advice. I am not your financial advisor. This is market commentary and research for education. Now here is my ranking from number 5 to number 1. At number 5, I have LEU. Not because the story is weak, but because the risk-reward is the most sensitive to execution, policy timing, contract timing, and volatility. LEU may have major upside if the fuel security narrative strengthens, but it is also the name where investors need the most caution. At number 4, I have PWR. This is a serious infrastructure name, but it is more of a grid construction backbone than a direct nuclear fuel or reactor play. If the AI power build-out continues, PWR belongs on the watch list, but its nuclear connection is indirect. At number 3, I have BWXT. BWXT may be one of the cleaner nuclear picks and shovels companies in the group. It has real nuclear systems, components, and services exposure. But investors still need to watch valuation, contract timing, and the fact that it may be less explosive than higher beta nuclear names. At number 2, I have CEG. If the nuclear revival becomes a fuel story, CEG is one of the first names investors may study. It offers cleaner uranium and nuclear fuel leverage than most speculative reactor stocks. But uranium cycles can be brutal, so entry price matters. At number 1, I have EEN, not because it is a pure nuclear stock, but because it may offer the best combination of AI power demand, electrification, grid upgrades, business quality, and durable infrastructure exposure. If the real bottleneck behind AI is electricity, and if nuclear becomes part of the long-term power solution, ETN sits in the layer every power source needs, electrical infrastructure. So here's the big takeaway. The nuclear revival is not a single stock story. It is a supply chain story. The loudest SMR stocks may get the attention, but the companies behind fuel, components, electrical equipment, grid upgrades, and engineering may become the more durable long-term watch list. The obvious trade may be SMR hype. The second-order trade may be the nuclear infrastructure chain behind it. If you want more second-order market breakdowns like this, subscribe to Stock Breakout, hit the like button, and comment which stock you would rank number 1. CEG, LEU, BWXT, ETN, or PWR.